The war is coming to an end, and the market is finally starting to believe it. Trump just said it directly. Iran has agreed to almost everything. The next round of in-person negotiations happens over the weekend. The new Iranian leadership Trump described as, quote, very reasonable. A 20-year minimum to stop enriching uranium. A deal on the table. A deal that looks increasingly likely. And the market responded. Bitcoin through $75,000. XRP pushing toward $150. Alt season rotation broadening. Bitcoin dominance decreasing. Every classic signal of a macro regime change from fear-dominated compression to risk-on expansion is firing simultaneously. But here is what most people watching this rally don't understand. The geopolitical de-escalation isn't just a crypto catalyst. It's the removing of the single largest variable that has been suppressing every other catalyst for the last 6 months. Every piece of infrastructure we've been tracking, every regulatory development, every institutional partnership, every adoption milestone. All of them have been materializing during the conflict, but their price impact has been absorbed by the macro fear. When the macro fear lifts, and today's signals suggest it's lifting faster than anyone predicted 30 days ago, the compression that's been holding everything down releases simultaneously, and the assets positioned underneath that compression get repriced at a velocity that short-term charts can't capture. Today, I'm going to walk you through exactly what Trump's statements mean for the geopolitical timeline, why the combination of Iran de-escalation with the Clarity Act and the Coinbase Market Maker program creates a convergence that XRP has never experienced before, what happens when Bitcoin dominance drops during a risk-on rotation, and why the people who held through the pain are now positioned for the phase that historically rewards patience above all else. This is not financial advice. I am sharing publicly available information for educational purposes. Always do your own research. Before we get into it, drop held in the comments if you held XRP through the entire 6 months of pain. Drop accumulated if you bought more during the fear. Drop just started. If you're joining now as the regime is changing, all 3 groups are welcome, because what I'm about to walk through matters regardless of when you arrived. Welcome back. I am the Calm Analyst. Around here, we don't react to single headlines. We read convergences. Today, we're decoding the Iran negotiation progression, connecting it to the Clarity Act timing, showing you why today's Bitcoin breakout is just the first signal of a broader rotation, and explaining why the post-consolidation phase of XRP's cycle typically produces the largest moves with the least warning. Let's get into it. Let me start with Trump's statements, because the precision of what he said matters more than the headline reactions suggest. Trump said, and I'm quoting directly, "It's looking very good that we're going to make a deal with Iran. It's going to be a good deal. It's going to be a deal with no nuclear weapons." Then he added, and this is the part that changes the probability model. The new Iranian leadership, after the strikes eliminated the previous command structure, is, quote, very reasonable. A US president calling the Iranian leadership reasonable in public is a significant diplomatic signal. It doesn't happen when negotiations are hostile. It happens when negotiations are approaching consensus. The language itself is diplomatic positioning, signaling to both the domestic audience that a deal is coming and to the Iranian side that the US is ready to conclude. The 20-year minimum enrichment pause that Trump referenced is a negotiation position. Iran has counteroffered 5 years. The actual deal, if one materializes, will land somewhere between. But the fact that both sides are publishing specific timeline positions means the diplomatic framework has moved past conflict management into deal construction, and the blockade is working. Trump was explicit. The blockade has been incredible, held. Iran is unable to do any business. They have no navy, no air force, no anti-aircraft equipment. Their leaders are gone. This is not a stalemate. This is a position of maximum pressure that produces negotiation leverage. Maximum pressure plus reasonable new leadership plus in-person weekend negotiations plus explicit presidential signaling that a deal is coming equals the highest probability of resolution that this conflict has offered since it began. Not a certainty, but a meaningful probability shift from the stalemate that had been the base case. The market saw it. Bitcoin through $75,000, risk assets rallying, oil dropping back under $100. The transmission chain, the oil to inflation to Fed policy to crypto flows, is reversing in real time. If today's geopolitical signals just shifted your probability estimate for resolution, smash that like button. Because understanding when probabilities shift is how you stay positioned for the move before it becomes obvious to everyone else. Now let me connect this to the Clarity Act timing, because the convergence is accelerating. Fox Business reported that banks are upset with Coinbase because they were forced to accept the Clarity Act compromise. Translation, the banking lobby's attempt to kill the bill through the stablecoin yield provision failed. the compromise went through, and the banks are now in the position of accepting the framework they spent 3 months trying to block. That's the political signal that the bill is actually moving. When lobbyists complain that they were forced to accept legislation, it means the legislation is advancing despite their opposition. When they're successfully blocking bills, they don't complain, they quietly win. The banks complaining publicly means the compromise holds, which means the markup can proceed, which means the bill can reach the Senate floor before the midterm window closes. Combine that with the macro improvement. When the Senate is not consumed by emergency war-related debates, floor time opens up for other legislation. And when the financial markets are stabilizing because geopolitical risk is receding, senators from battleground states have political cover to vote for bipartisan digital asset legislation that produces economic benefits for their constituents. The Iran de-escalation is not just a crypto rally catalyst, it's a legislative timeline enabler. The same forces that are lifting Bitcoin are creating the political environment where the Clarity Act can actually pass on the aggressive timeline that Garlinghouse and Tim Scott are pushing for. And the markup window remains open for approximately 2 more working weeks. If the macro continues improving through the weekend, which Iran negotiations suggest it will, the markup happens in late April with favorable political conditions. If it stalls, the bill still has a path but loses some of the momentum advantage. Comment below. What's your probability estimate for Clarity Act passage in 2026 given today's developments? Type 70% if you're cautiously optimistic. Type 85% if you think the momentum is now overwhelming. Type 50% if you're still skeptical. I want to see the real calibration from this community because your probability estimate determines how you position over the next 60 days. Now let me address Bitcoin dominance, because this is the technical signal that most people miss and it matters enormously for XRP specifically. Bitcoin dominance measures Bitcoin's share of total cryptocurrency market capitalization. When fear dominates the market, capital concentrates in Bitcoin as the safest crypto asset. Dominance rises. Altcoins bleed relative to Bitcoin. When confidence returns and risk appetite expands, capital rotates out of Bitcoin and into altcoins. Dominance drops. Altcoins outperform Bitcoin on the way up. Today, Bitcoin dominance is falling. Alt season is beginning. Rave DAO running thousands of percent. Siren up 122%. HBR moving. Pangu running. Multiple altcoins across different categories showing double-digit weekly gains. This is the documented pattern of early-stage alt rotation. Here's why this matters for XRP specifically. In early alt rotations, meme coins and small caps often lead because they have the smallest market caps and the most speculative capital. Rave DAO going 7,000% is the signature of speculative rotation, but in sustained alt rotations, capital eventually moves to utility-driven assets with institutional backing. Because the institutional capital that drives multi-month moves follows verified thesis rather than chasing parabolic charts. XRP sits perfectly positioned for that second phase. The meme coin rotation signals that risk-on has returned. The utility-driven rotation that follows is where assets with documented infrastructure, regulatory clarity, and institutional adoption capture disproportionate flows. XRP is in the center of that second phase. The sequence matters. Meme coins first. Mid-cap utility plays second. Large-cap institutional-grade assets third. If the sequence plays out historically, we're currently in Phase 1. Phase 2 and 3 are ahead, and XRP is positioned in Phase 3 specifically because of its institutional integration depth. This isn't speculation. This is how alt seasons have unfolded in previous cycles, and the signals today match the early phase of a multi-month rotation rather than a single-day bounce. Subscribe right now. Hit the bell. Drop a in the comments. Because tracking the phase-by-phase rotation is what separates people who time the institutional flow from people who buy at the top of the speculative phase and sell at the bottom of the utility phase. Now let me zoom out to the bigger picture, because what's happening this week fits into a pattern that only becomes visible when you step back. XRP bottomed at approximately $1.12 in early February 2026. 6 months before that, it peaked above 280 in October 2025 before the Trump tariff announcement triggered the largest single-day liquidation in crypto history. 6 months of decline. Consolidation at 127 to 135. A slow grind sideways while the macro fear dominated. And then April arrived. ETF inflows turned positive after the March outflow. Rakuten integrated XRP. The Clarity Act compromise completed. The Iran negotiations advanced. Bitcoin broke through $75,000. XRP pushed through 140 toward 150. Each of these events was small in isolation. Together, they represent a regime change. The candlestick pattern on the weekly chart tells the story. 2 weeks ago, XRP consolidated at $1.30 in boring sideways action. This week, the candle is opening and closing in ways that technical traders read as accumulation completion. The sellers are exhausted, the buyers are building positions, and the move that follows accumulation completion is typically the largest move of the cycle because it combines exhausted sellers with accumulated buying pressure. Standard Chartered's base case of 280 for 2026, bull case of $8. These are institutional targets from credentialed analysts. From 147, the base case is 90% upside. The bull case is 424% upside. And the institutional flow timeline typically lags announcements by 6 to 12 weeks, which puts major catalyst activation squarely in the May through July window. The people who bought during the fear are now in position for the move. The people who sold during the fear provided the exit liquidity, and the people joining now are arriving at a transition point where the infrastructure thesis is finally aligning with the macro environment. Let me address what early actually means, because the statement that the best is yet to come from the original transcript has specific implications that deserve honest treatment. Early relative to what? Early relative to retail adoption. Absolutely. Most of the world hasn't heard of XRP. 25 million people globally hold any XRP. That's 1/3 of 1% of the world population. Early relative to institutional adoption. Also yes. Goldman Sachs has $153 million in XRP ETFs. BlackRock hasn't launched its ETF yet. Morgan Stanley's 15,000 financial advisors are just beginning client conversations. The $13 trillion Ripple Treasury pipeline is 0% on-chain. The institutional capital flow is at the earliest stage of what could be a multi-year build. Early relative to sovereign adoption, definitely. Only 5 CBDCs are live on XRP Ledger infrastructure. The ECB's digital euro decision is ahead. The central bank reserve question is 5 to 10 years out. The sovereign infrastructure positioning is barely beginning. Early relative to price capture, the honest answer is depends on your target. Relative to 280, we're not particularly early. Relative to $28, we're early. Relative to the theoretical extremes, we're extremely early. The best framing is that XRP is in the early stages of converting infrastructure into price. The infrastructure has been built over a decade. The price has been suppressed by the combination of regulatory uncertainty, macro compression, and institutional allocation timelines. That suppression is lifting, and the conversion from infrastructure to price takes time, but once it starts, it produces sustained appreciation over years rather than explosive single-day moves. Being early doesn't mean being right. Being early and being right, positioning in an asset that has the infrastructure thesis backing while the price hasn't yet caught up, is what produces the outsized returns that institutional allocators spend careers searching for. Let me leave you with this. Today is a single session. Tomorrow could give back some of today's gains. The macro could turn back bearish if negotiations stall. The Clarity Act could face additional delays. Every one of those possibilities exists, but the structural picture doesn't depend on any single day. The structure is comprehensive institutional infrastructure built over a decade, regulatory clarity advancing, commodity classification already achieved, 7 ETFs live, Morgan Stanley distribution beginning, SWIFT certification operational, $16 trillion in payment pipeline with the on-chain switch installed, 5 CBDCs deployed, auto-bridging capturing value from every ledger transaction, macro fear lifting, and the Clarity Act approaching its definitive window. That structure exists regardless of whether XRP prints 150 tonight or 140 tomorrow. The short-term price movements happen within the structure. They don't determine the structure. And the structure is positioned for the kind of repricing event that defines institutional-grade asset classes when the conversion from infrastructure to price begins in earnest. If you held through the pain, you are rewarded when the conversion begins. If you bought during the fear, you are compounding that reward. If you're just starting now, you are joining at a transition point where the worst compression has lifted and the forward path is clearer than it's been all year. The best is yet to come is not a hype statement. It's an observation that the conversion from infrastructure to price is multi-year in nature, that we are in its earliest stages, and that the asymmetry today favors long-term holders over short-term traders. Price is a distraction. Value is the reality. Structure is what matters. And the structure converging this week, Iran deal advancing, Clarity Act compromise holding, Bitcoin dominance dropping, alt rotation broadening, institutional infrastructure maturing, is the clearest alignment of forward positive forces XRP has experienced in 2026. In a market fueled by emotion and noise, we thrive on data and composure. Remember, haste leads to loss, while calm analysis leads to victory. Comment, calm analyst below. Tell me honestly, where were you at 1.12? Buying? Holding? Watching? Because the calm investor doesn't need every decision to be perfect. They need enough of them to be right. And being positioned during the fear is usually the one that matters most. Like, subscribe, notifications on. I'll see you in the next one. Stay patient, stay rational. And as we always do, we don't wait for the future. We plan for it. Peace.